Hey guys, how are you? Hope you're doing well. Let's go over my trades for the day here. And so yeah, you can see I traded these options, the SPY 277 calls, the 279 calls, and the 270 puts. I'm pretty much flat on the day, and let's take a look. It's an evening trade review here I'm gonna do for you. So let's go over it. You can see that I was pretty much flat on the day, and there are all my trades. You can take a look at them if you want. So the first trade I opened was a short call trade at 10.25. Now, I'm going to go through all of the setups that I saw today and that I almost traded, because there were two trades in the morning that I was trying to get filled on, but either didn't execute the trade or was not able to land a fill on the trade. So I'll go over those real quick here. Now, again, those are all my executions for the day. So everything I tell you, trust me in the sense that I'm not going to be telling you bullshit executions, because I actually executed these trades. So the arrows I just put in, I did the work to put in these arrows right now, are actually where my executions took place. Now these are 2-minute candles, so it might be like in the higher part or the lower part of the 2-minute candle, but just to let you know, okay? So let's take a look at it. Now, the first arrow here, I did not execute this trade right here, SPY on the 2-minute chart, but this popped out to me when we saw it the first thing. So let me use the replay function to start it. Now, again, I was watching the NASDAQ today as well as the S&P. The NASDAQ was a great indicator for a few things. And the chart for the NASDAQ I was looking at was this one, NAS 100 USD. Dan from the Chart Guys brought the 6-hour time frame to my attention, and it was quite an interesting time frame when you saw what happened in today's intraday price action. Anyhow, so S&P moved up and then down initially. The first move was down. Now on this retrace of the moving average, I wanted to take a short. I felt like it was a higher probability to take a short because the first move was down, and this right here was an appealing area to go short. And I saw this pulling back here, and I saw the opportunity, but I didn't execute the trade. I even saw those puts, and I think I was looking at the 270 puts. They were trading for around $50 a contract, and I didn't grab them. But if I did, you would have caught that second leg down here. You can see not so much remorse for those bulls. So this was the whole second leg down. And look at how we reacted. We saw a couple of little bounces, but again, nothing serious. And that brought us all the way down to practically the low of pre-market, 275.40. And it was almost the low of yesterday, but not quite. So it was around this area, this 275 to 276. And we went right down to that support here. And again, it was about 3 legs down. If I bring up the NASDAQ chart, look at the open on the NASDAQ. Okay, this was the previous high. And again, we pulled back down here. This was a 3-legged pullback. 1, 2, and then we had the third attempt lower. And on this third attempt lower here, I was trying to fill the short put order to sell the 210 puts on the Qs. And I wasn't able to get the order fill in that moment. I felt like I had to chase it too much. It was really hard to chase that fill. Anyhow, I didn't quite land it, but if I did land it, it would have been right around this general area, right around the area where we saw a third attempt lower and a failure at that point. Again, I didn't land the fill. I tried my best, but I didn't want to chase it again. And that's it. So then started the problem. So right away, there's 2 quality trading setups there that passed me in the morning. I wasn't able to execute them. This was the first short off the moving average. And then after that, there was other shorts to bring it down, but the selling was too aggressive. We didn't actually get any pullbacks to the moving average. You can see the pullbacks we got were very minimal. Again, after the third attempt lower, that's when the SPY retraced. Now, I was trying to short into the moving average here. This is where I executed my first short call spread. I sold the 277 calls, and I wasn't really planning for those calls to expire in the money or out of the money. I just sold that spread, 277 to 279, just because that was the spread closest to the trading price in a way, okay? So basically I held on to this spread, and it wasn't a great idea to do that, I'll be honest with you. Once SPY started to keep buying off the moving average, it was not exactly a great idea to keep holding on to this spread at this point. And again, it was tough because look at the buyers that decided to come in here at the moving average. So we saw a low 1 at the moving average, and then a low 2 at the moving average, followed by some consolidation, followed by a huge bull pushing the price up. Now this huge bull right here, after a low 2 at the moving average, signals strength. Essentially, it signals bull strength. So that would have been a signal to reverse the position, although I didn't do it. I stayed short, and I added another one after we moved higher. So you can see that SPY tried for a second leg up, and again, this was the area that people probably shorted into before. So the market's seeking the liquidity from the earlier part of the session. Again, we bounced right off the moving average into a higher high. I'm short the market at this point, and I'm saying like, okay, I wasn't down so much because I was trading with small size, but again, I didn't set myself a hard stop for these trades. And then I had realized that since the market's trending higher, my 277 call is actually in the money now, and I would be probably better off covering it and being long the 279. But unfortunately, I don't have enough capital in the account to cover just the 277. So I keep holding it. And then I started to look at this, and I actually kept on shorting, I'll be honest with you. And I don't really like how I approached this at all. I find it was irresponsible in every way possible. So I didn't really cut my losses in any of this, and I should have been just trading with the trend, buying the moving average as it goes up. And again, I see this every single day, like so many days in a row now, where the market reverses. We're in a bull trend. Bulls are buying every dip that comes to the moving average, and here I am trying to be shorting the market while the market is pulling back to these moving averages and finding buyers every single time and shaking out shorts. So just look at how we moved up. You can see we practically broke above this previous resistance, and then we consolidated. So look at how the price reacted here. I bought a put here right into this rally. I bought another put here. So I was short still. And I was buying these puts while the market was ticking up, not down. So I was trying not to overpay for them. Now what happened was I managed to take some profit on these puts here as the market was coming in for a two-legged pullback. So you can see here we got one pullback, an attempt to move higher, and there was a first leg down to the moving average. Now look at how the price reacts at the moving average. We see an inside bar. That's where I took off half the put position for some profits. I locked in some profit there. Again, these are scalps. Through all this, I'm holding the short calls. I'm just trying to scalp around it to potentially generate some profit. So I covered one put here and I covered another put there. And at that point, I was out of the put options completely. All right. Now the market bounced off the moving average a second time, and I was looking at this saying, most probably this is going to be a lower high. Now, obviously, when you think something is likely, it's always the opposite that happens. And the NASDAQ remained strong. I bought a put option here, but look at what the market did. We pulled back a second time to the moving average, and then the bulls came in to push this up another time on nice volume. So they were pumping. They were pumping this, man, the whole way through. So look at how we reacted here, coming above this 280 area on SPY. And again, the NASDAQ was a better indicator, but we're looking at SPY here. But I want you to do your studies on both the NASDAQ and the S&P because they both gave clues. Also, you had to be watching the tech sector names. There was a lot of clues as to what was happening here. So look at this big pop up. Now we're one inside bar, two inside bars after that. Here I added another put option for a very cheap price. So I bought here and then I bought again here on that pop. And my target was going to be basically the moving average. I wasn't expecting much. But once I saw this price action and what it did, I realized that this could be a huge fake out of some kind. And my expectations were not in line with this is going to be a huge fake out. But once I saw what happened after, how aggressively we started dumping, I realized that this was a huge bull trap that had occurred in the NASDAQ, breaking above its 6-hour resistance point, which would have been here. So this was a 6-hour resistance point on the NASDAQ. It was about 86.99 was the level. You can see that when we broke above that, the bulls took full control and the buyers were coming in. But again, look at how aggressively we moved up. And then after that, obviously it marked the top. And this tick right here, that was the indication where we saw a final pop, and the pop that popped at the highest, that was the one that got sold into the most. And then from that area on, the sellers were aggressive and they kept pushing this down and down and down. And that's really crazy because they got everybody looking one direction, which was up. Obviously, because we were breaking above that key resistance area, and because so many traders were positioned long during this, it gave them the window to just sell and grab all of that liquidity. And because of how aggressive the move was, a lot of people were caught off guard by that move and were trying to also average down their positions and buy the dips. But every time they would try to buy the dip, they would just smash it another time. And that's the crazy thing, is because the market gets you used to a certain way of thinking, and then it will smash all of your hopes away, of course. And that's the kind of market condition we're in. We're in the irrational market. So yeah, just to say a few words. Lucky me, I was short, but still, right? So I covered the first put there. I covered another put there. We came down. This is the second leg down now. So big one leg down. We saw a little bit of a relief there, and then look at this immense second leg down. Now I want to see where the VWAP would have been. I think it was just right around 277 or higher. I think it was a bit higher, right around here. Anyhow, we sold through VWAP pretty aggressively and then kept on going. I covered the last put here. And then at this point, I'm still short the calls and watching how aggressively this market is selling off. So look at how we attempted a bounce here around this 277 handle. So again, we tried once, twice, 3 times, and then more bear volume. And again, this is just playing with people's hopes. People are so used to buying the dip, buy the dip, buy the dip, that now buy the dip's not working, and well, it's over. So you can see that we dumped right down to that low of the day. First leg, second leg, third leg, and then it was a slow recovery up. So once we hit the low of the day, look at what SPY did, grinded back up. So that's it. So basically I took off my short call over here at 12:30. I'll show you that. So you can see here at 12:30, I sold half my position, and I actually put in a stop limit order in the market above my break even. So I was actually willing to take a small loss on the rest of the position because I had locked in some gains. So I put a wide stop, expecting the market to potentially chop around here, maybe catch the moving average and continue selling or something. But obviously we didn't get that, and my stop limit got taken out around 1:30. So I'm actually grateful that I used a stop limit order today and I got stopped out of the trade, because, well, if I didn't, let's see what would have happened. That 277 call that I was short would now be 12 points in the money. So guys, this is why we use stop losses, for one, and this is why we don't hold overnight, number 2. All right guys, so that's going to be my review for today. So for tomorrow, watch these tops. I mean, we're into some weekly resistance here. This is pretty insane. We're coming close to the 9,000 handle on the NASDAQ. Like, it's really insane, this recovery that we've gotten. So definitely we're looking to be a bit extended to the upside, but I mean, obviously when things are getting this irrational, you can expect anything to happen. But definitely there's strong resistance here around this 9,000 area. So guys, keep it like that, keep trading, and no holding overnight, and I'll see you tomorrow. Take care. Bye.